Hello everyone, welcome to High National Certificate Level 4. In this session, we will be covering Unit 5 Learning Outcome of Management Accounting. And we aim to cover Learning Outcome 1 to demonstrate an understanding of management accounting systems. The objective of this session is to demonstrate a good knowledge of management accounting, including its principle and integration within an organization. Understand the difference between management and financial accounting, understand the different types of management accounting system and their benefits, and present financial information that is relevant for management. So now let's move on to the title of the course, Management Accounting. So management accounting is a branch of accounting. There are also other branches of accounting. So to understand management accounting, we first need to understand the meaning of accounting. So, what is accounting? According to the definition, accounting is the process of systematically recording, measuring, and communicating information about financial transactions. Accounting is the process of identifying, measuring, and communicating economic information to perform informed judgments and decisions by the users of that information. So from this definition, we can deduce that the focus of accounting is to provide systematically prepared, highly reliable, and verifiable authentic financial information available for interested persons to make informed decisions about the organizations. So therefore, we can conclude that accounting is a specialized service function. It involves the collection, recording, and storage and summary of data. Data is mainly of financial nature. These data are analyzed and communicated to the interested parties. So, who are the users of accounting information? The users of accounting information are management, shareholders, creditors, employees, government, investors, competitors. Moving forward to the branches of accounting. The accounting consists of four main branches: financial accounting, management accounting, auditing and assurances, and taxation. So financial accounting consists of provision of robust financial information for external and internal decision. Management accounting is providing financial and non-financial information to the management for decision-making. Auditing and assurance, fiduciary services to provide independent views on financial accounts to evaluate their true and fair status. Taxation is the computation and management of business obligations to government for compliance purposes. Management accounting in perspective. It's all about using information to plan, control, and make decisions. Accountants produce this information and managers use information through the reports. Managerial accounting information are used for forecasting and performance evaluation. Managers can be held accountable and responsible for using management accounting information. What is the main goal of management accounting? It's establishing to empower managers to be effective at planning, controlling, and making business decisions. According to Chartered Institute of Management management accounting is the application of principle and accounting financial management to create, protect, preserve, and increase value for stakeholders, for profit and non-profit enterprises, in public and private sectors. Things that we need to keep in mind: what is the purpose for management accounting? So the main objective of management accounting is to provide accounting information for the use within the company. Such information can also be useful by other persons outside the organization, such as bank, credit rating agencies, and the government. The most well-known branches of accounting are financial and management accounting. If we look at the key areas of management accounting, we have four key areas that are cost accounting, budget and controllery accounting, performance management, and responsibility accounting. So cost accounting is understanding the cost behavior and how they flow across manufacturing process. Budget and budgeting control. These are the financial planning tool for organizational activities. Performance management, evaluation of actual performance with standard performance for variance analysis. Responsibility accounting is assigning cost and revenue centers to managers for the purpose of accountability. What are the main fundamentals for management accounting? The main fundamentals of management accounting are explaining manufacturing and non-manufacturing costs and how they are reported in the financial statements, computing the cost of rendering a service or manufacturing a product, determining the behavior of costs and expenses as activity level changes, and also analyzing cost volume profit relationship within the company, assessing management in profit planning and formalizing the plans in the form of budgets, providing a basis of controlling cost and expenses by comparing actual results with planned objectives and standards, also accumulating and using relevant data for management decision making. Moving forward to the functions of management accounting. Management accounting have 6 main functions that are planning, controlling, auditing, costing, decision-making, and financial management. The planning is searching, looking within, a broader look around and a longer look ahead of an organization with a view of determining the best steps to adapt to attain organizational goal. Planning is classified into long-term and short-term. So long-term planning is also known as corporate or strategic planning. It's linked with the overall vision of the company. Its coverage is more than a period of 12 months, whereas short-term planning, on the other hand, relates to the objectives that are said to be achieved within a period of less than 12 months. Strategic planning is not particularly a management accounting function. However, management accounting is usually a member of the strategic planning team constituted by the management. Since all planning requires data, the management accountant provides the financial data needed for strategic planning. If we look at the strategic planning processes, at first, the company needs to have some SMART objectives. For example, to earn a minimum of 20% return on capital employment, assess the company's current position, evaluate the external factors that will apply during the period of the plan using pestle analysis, specify the difference between the current position and the required future one, conduct a SWOT analysis, and put the strategic plan together. Management accounting and short-term planning, budgeting and budgetary control are a significant part of short-term planning. The management accountant is fully involved in the entire budgeting process. Variance analysis is a critical tool adopted by the management accounting to evaluate the performance of short-term plan. Management accounting system helps manager to be accountable for achieving objectives in short-term plans. The controlling function consists of financial control, cost control. So financial control involves the process and procedures by which organization monitors and directs the use and allocation of resources for the attainment of organizational goals. Whereas cost accounting is an important aspect of financial control. Through cost control, companies compare the actual costs incurred with projections and investigate the reason for the variances. Preventive strategies are developed to forestall reoccurrence of negative variances, while positive variances may be considered good. Cost accounting consists of 3 functions. This involves the collection of companies' ongoing costs and revenues and recording them in a double-entry bookkeeping system. It also involves the calculation of actual cost of products and services for stock valuation, control, and decision-making purposes. In the past, cost accounting was the major function of management accounting. The decision-making function. Various financial data collected and analyzed through the management accounting system enables manager to take crucial business decision. This decision-making information includes anticipation and expected future costs and revenues. This includes data which may no longer be part of the traditional ledger accounting system. Recently, providing information for decision-making is one of the primary functions of management accounting. So most of the decisions are of one or of special nature taken by the manager. Financial management is concerned with the operational or capital funding, investing, and dividend payment decision of a company. Its main purpose is to seek out funds necessary to meet the planning requirements of a company economically. This function ensures that funds are made available when required and that they are used efficiently and effectively. So in recent years, this function has become really important. If you look at the term economy in terms of financial term, so this is the acquisition of resources, appropriate quality and quantity at minimum cost. Efficiency refers to the achievement of either maximum useful output of resources devoted to an activity or required output from minimum resources. Effectiveness is the use of resources in such a way that the output of activities achieved the desired results. So auditing function. Auditing is an independent examination of financial activities of the company to determine if the information provided in financial statement reflect the true and fair state of affairs of the company. So this also involves the checking and verification of accounting information and accounting reports. There are two main types of auditing, external and internal. External auditing is considered as financial accounting function. The external auditors are not staff of the company, but work for professional accounting firms. They do not report to the management of the company, but to shareholders of the company. External auditing is more of a management accounting function. They are employees of the organization and they report to the management of the company where they work. They are responsible for assessing the economy, effectiveness, and efficiency of the management system rather than exclusively on cost and financial records. So as we have gone through what is financial accounting, management accounting, and the purpose of management accounting. So now I expect you to answer this 4 questions. What is financial accounting? What is management accounting? And what is the purpose of management accounting? And what are the 6 functions of management accounting?